What is going on, guys? Nick here, back with another video. UPS announced earnings earlier this month where they recorded record earnings for the company, and on top of that, they gave really positive outlook for 2022. UPS has seen a boost from the increase of shipping rates and also increased e-commerce sales driving revenue. On top of this, they also see higher profit margins in 2022 versus 2021, even though there's been an increase in labor and fuel costs in the shipping industry. Since COVID happened, there's been a huge increase in e-commerce demand, which has been driving shipping rates. I also think that more and more small businesses just find it easier to start an online company where they ship products out of their houses or an office. If you've got a great product, it's so much easier and effective to advertise online to the entire world than it is to find a store to rent in a good location and then set it up and decorate to only limit yourself to those who live in the area. Of course, though, this does depend on the business. UPS CEO Carol Tom took over UPS during June 2020 and has changed a lot of UPS's strategy to prioritize lucrative deliveries over volume, focusing on contracts with healthcare businesses and small and medium-sized businesses. This makes a lot of sense to me because when you think about high volume shipping, you're going to have to compete with the post office, which is a government-run service that really doesn't have to turn a profit like UPS, FedEx, or DHL, and it's also mandated by the Constitution, so it's probably not going anywhere. Also, the most common packages I receive are from Amazon, and it seems like Amazon delivers most of them directly themselves, so focusing on more lucrative and sporadic deliveries is probably the path of least resistance for UPS anyways. So UPS reported earnings on February 1st, and they reported $3.59 per share versus the $3.11 expected, and revenue came in at $27.77 billion versus $22.38 billion expected. So when we look at a full year of earnings reported at each quarter, with the most recent quarter in red, UPS had a monster quarter over the past year, with a full year of earnings per share coming in at almost $15 per share. It seems like all of these increased shipping prices have really driven profits for UPS. When we look at the past 10 years of revenue and earnings for UPS, we can see that massive jump in revenue and profits. I also want to point out that it seems like 2022 had a pretty negative impact on their profits, but after looking further into this, it's actually primarily because of a $5 billion charge that they took related to their pensions. The important part of this is it wasn't the result of a bunch of added costs and expenses from COVID. Now, I would look at the revenue versus expenses here, but UPS really doesn't break that down in a very useful way. So instead, let's just jump to the segments. So we can see the US is by far where the majority of the revenue comes from, but I found it really interesting that even though the international business produced a lot less revenue, they're actually almost as profitable as their domestic delivery business. When we look at their forecasted revenue and earnings, we can see that UPS is projected a slight decrease in profits, going from $97 billion in revenue and $12.8 billion in profits to $108 billion in revenue and $11.8 billion in profits by 2024. Now, just like my Coke video, normally I value businesses based off of a PE ratio correlated with the growth rate. And if we do that for UPS, you'll see using a 0 to 3% growth rate, which correlates to a PE ratio of 8 to 11, we can see that UPS would be insanely expensive. But this is because UPS pays a dividend. At $209 per share, UPS is paying about $6.08 per share, which is almost a 3% dividend yield. But when we look at dividends versus earnings, we can see that earnings per share is up by a lot. And in the last quarter, UPS's dividend did jump by a lot, going from $1.02 to $1.52 per share. I wouldn't be surprised if this dividend increase continues to drive the share price for UPS, especially if these earnings projections are accurate. Now, if you look at these three charts showing the stock price, the dividend payout, and then the dividend yield, we can see that pretty much between 2010 to 2019, UPS was a 3% yield stock. And the only reason why it seems to have dropped is the stock price seems to be anticipating a higher dividend payout. And I think with these increased earnings per share, I think the dividend will probably increase, but it is up to management to make that decision. So I think UPS has set itself up in a pretty good position going forward. It seems like focusing on higher margin deliveries, the tailwind from higher shipping rates, and a general increase in demand for shipping has really given UPS a profit windfall. While there might not be a lot of growth for their profits over the next few years, I do think that they've set themselves up well to increase those dividend payments. And we can actually already see that starting to materialize with their most recent boost to their dividend payment, so I do expect this to continue. Now, if you really like dividend stocks, check out this great video I have for you next about Warren Buffett's favorite dividend company, Coca-Cola. And as always, thanks for watching.